Okay, it's the 3rd of March. It's a Monday. We've got about just over 20, we got about, 30 minutes, just over 30 minutes to the NY Open. We're going to go to the charts very soon. Perfect, all's good. Yeah, okay, just a second. Okay, right. Let's take a look at the calendar before we go to the charts. So, this is a big week, NFP, probably one of the biggest weeks for the month. Sound good? Yeah, I think we're good. Yeah. So this is a big week. It's NFP on Friday, so there should be a fair bit of volume this week. Uh, we will have a better idea once we see the daily candle close today, right? That will give us some sort of idea the kind of volume to expect. Now, there's nothing guaranteed in trading, but we have to take a calculated, we have to weigh our pros and cons and make calculated decisions. And that's what trading is all about, right? Making calculated decisions based off logic. Um, okay, so there is some news event at in about 2.5 hours from now. That's not important. That's not going to do anything. But the main news event for the week is going to be NFP. That's on Friday, right? But we should, because it's an NFP week, there should be volume, a fair bit of volume throughout the week. Yeah. Okay. Right. Let's go up a time frame to the weekly and let's see what's happened. Uh, yeah. So the weekly has closed below 2882. We've closed below 2882 weekly resistance. Let's also look at the monthly. If you were here on Friday and you watched and you were there for the first 10 minutes or the first 12 minutes of the stream on Friday, or you re-watch those 10 or 12 minutes, then it'll make sense what I'm saying right now, right? We kind of anticipate this move. I said I spoke about a large weekly, a large monthly top wick, right? So listen to the first 10 minutes or the first 12 minutes of the stream, and this is exactly what I said. We anticipated all of this, right? Quite a bit of a large monthly top wick, right, to be created. For that to happen, the weekly, so that would mean there is a rejection at 2950, right, on the monthly time frame. So for price to basically be pushing down, that's just off the monthly time frame. Each time, keep this in mind, that each time frame offers information, right? Now sometimes when you match the time frames up, they might not add up, but you got to look at them individually, what the monthly tells you, what the weekly tells you, and what the daily tells you, right? So on the monthly, there is I said we could anticipate a large top wick, which is what happened, reject in 2950, which is exactly what happened. Uh, and for that to happen, the weekly would have to close bearish, right? A strong bearish. That's exactly what happened. The weekly closed strong bearish. And then if the weekly closes strong bearish, that means price is pushing down, price is heading down, price is bearish, the trend is bearish, which means the weekly would need to leave a bottom wick range for the daily candle to fill next week. That's what I said on Friday, right? Those are my words. That was on Friday, right? So I said the daily therefore has to push up for the weekly candle to leave a bottom wick. The daily has to push up, right? And the daily would have to push up from a weekly SR level or from daily demand, right? Those are what I said. Watch the first 10-12 minutes and you'll be able to hear exactly what I said. So the weekly turned bearish and the weekly did push up if you go to the daily, and the daily created that we tapped into the daily demand, which is a rally base, two basin candles and a rally, and also 2834, a perfect touch of 2834, a weekly support level, and price pushed all the way up, right? So the price pushed up. We've gone about 400 and almost 430, 440 pips, right? So that was what happened on the daily. Now, if you again go back to the weekly, we are closed strong bearish. That's a bearish engulfing candle. So price is very bearish on gold, trying to push down at the moment. So this could be price trying to create a top wick on the weekly for price to continue down, right? But we've closed, it's important to note that we've closed below 2882, right? That's a weekly resistance level. We've closed below that. Okay, on the daily, what happened on Friday was price tapped 2882, went all the way down to 2834, so that was a big drop. That's a 500 pip move down, and we rejected 2834 and we pushed back up, right? That's what is happening on the daily. Currently we're pushing up, right? We've gone past this demand zone, we've broken that low, we've gone past it, but we're pushing up. We're reacting to that demand. This is a reaction. That's the source of demand on the daily time frame. This is the source. Again, each time frame, look at them individually. Each time frame offers information. Your job as a trader is to gather all that information and then make a calculated decision on what possibly you want to do for the week and for the session that you're trading. Or if you're a day trader, then what you want to do for the week. If you're a session trader, what you want to do for the session. Okay, so price is pushing up right now. We've rejected 2834 and 2850 and we're pushing up. Let's go to our trading chart. Before we draw our zones, I want to do a quick recap. And this is exactly what we anticipated at the beginning of Friday's stream. This is a counter trend trade. I said wait for 30 minutes support to be formed and then take the trade, right? So that is 30 minutes support forming from 2834 and also liquidity candle there. That's a liquidity candle. The light green area is a liquidity candle. It's very clear. All of these zones are drawn out. That's that liquidity candle right there from that zone. And M30 support form there. Wait for the pullback. As I always say, wait for the pullback, take the trade. You can place your stop loss underneath the 30-minute candle low that created support, or you can place it under the liquidity candle if the liquidity candle isn't broken. But this one, in this case, the liquidity candle price has gone through it and it reacted to the next liquidity level, which is 2834. So you would have had to place your stop loss underneath the 30-minute candle low, and that's the pullback, and price ran to this liquidity level, 343 pips, right? That happened, yeah, that run happened today during the Asian session in the morning, soon as the market opened, right? And we are pushing up. So let's get rid of all of these and start this process again. Okay. Yeah, I think that's good. Price hasn't broken this zone yet, so I'm going to leave it there. And we're going to start drawing our zones now, okay? Because these zones are all drawn on Friday. I'm not going to redraw them. It'll just be a waste of time, right? I'm going to extend these. If you want to see how they were done, I'm going to extend them later on to the right. If you want to see how they were done, take a quick look at the first 30 minutes of Friday's stream, okay? Let's start with demand. There's a demand level right here. There's demand right there. It's a rally, single base in candle, and a rally. Leg in, base, leg out. If you're going to take a look at this on the 1 hour, I always say this: if you have a 1 hour or a 4 hour candle cross important liquidity area, a price level. This is not a zone. This is a price level. This is a liquidity price level. Weekly SR levels are liquidity price levels, and they're not zones, right? So if you have a cross below them or above them, you need to go down to the lower time frame and check and see if there are zones there. So we're going to take a look at that area as well. So let's go down to the 1 hour time frame. Yeah, we do have a zone here. Okay, so that's a rally, 3 base in candles, or actually 4 base in candles and a rally. Let's go down to the 30-minute time frame and take a look at it. Yeah, that would be better. Okay, so let's put the numbers on this. This is open is sorry, the close is 043 811 043 811. That's 4-hour demand because it's visible on sorry, that's 1-hour demand. It's visible on the 1 hour. So I'm going to put in this here. Okay, and this would be 4-hour demand because it's visible on the 4 hour, right? Let's look further down. Prices has it broken this? What's this low? That's not the source. This is the source. Yeah. That's already marked. This is low here. 428. What's this low here? 3428. 270. 3270. Yeah, we've gone through that. Now what's this low? 265. 270. So we've tapped into this 4-hour lows. You see that green? That level has been marked for many weeks. And that's the one, right? The reason I left, now it makes sense, right? Why I left it there. I had it since, when was it? I think probably about the first week of Feb. I've been having this zone here. It's not visible. Let me just zoom in, show you guys. The little bit of the zone left, that's a rally, 2 basin candles and a rally. That was the original zone. Price came deep into it but didn't break through it. I said I'm going to keep that zone there because 2834 runs right there, right through it, right? So I had that zone, and that's exactly what we tapped and we pushed into. Okay, let's take a look at that area again on the 30 minutes, 15 minutes maybe. There is no base there. Yeah, there's no base there. So there is no base. There's a drop and there's a rally. On the 1 hour, it's a drop and a rally. On the 4 hour, it's the same. It's a drop and rally. So we just have, there's no base there. The open is 33.96. 3.96. Okay, that's the open. We got to have it to the open. On the 30 minutes, the same open, 33.96. Yeah, that's where the rally started on Friday. Okay. Yeah, I think that's good in terms of demand. We've got demand covered. We don't need to draw any more demand zones on the 4 hour. I think we look good. Yeah, they're fine. Yeah, let's look at supply. So price has tapped this. That was drawn on the 4-hour. A drop, single basin candle and a drop, but it's better visible on the 1 hour. Right, that was the zone. Yeah, extend this to the right. Just look at the 30-minute for a second. Now we have not created any supply. We've not created any supply, so price could react here and drop. Okay, so that is 4-hour supply. Yeah. Yeah, it's 4-hour supply. Going to extend this liquidity candle as well to the right. We're going to take a re-look at that liquidity candle. In fact, let me just delete that. We're going to take a re-look at that liquidity candle because it's already been tapped. Yeah, we'll extend this to the right as well. That's 1-hour supply. Price hasn't tapped it yet. And then there is this 1-hour supply. Price hasn't tapped that yet either. But they're all close to each other. So they've been tapped on the way down. They've been tapped. Keep this in mind. This is what happened last week for demand. When the demand zones are very close to each other, that's what happened. Price has tapped them on the way down. It's tapped into it, pushed down, tapped into it, pushed down, tapped into it, pushed down. But it's not done it. It's not tapped it yet on the way up. Okay, keep that in mind. That's about 200 pips to the upside. We've covered. Let's extend this as well. That serves a 1-hour zone. I think that's good enough. There isn't any major news today, except for some geopolitical news which happened over the weekend on Friday, but that's it. Okay, we're going to extend this liquidity candle also. The high liquidity zone. Okay. And is this still a high liquidity zone? It's a 111 pip zone. Price has come just 30 pips. Yeah, it's still a high liquidity zone. We haven't crossed the 50% mark yet. So that's a high liquidity zone, and that zone runs, and 2882 runs right through that zone. Okay, we're heading back to 2882. So you got to watch for that area. There might be a retest. Price might retest and push back down. The daily candle has no bottom wick. Okay. Yeah, that's what the daily open, no bottom wick. So we could push right through this zone all the way down to 2850. Okay. Right. Now, just save this. The next thing we're going to do is take a look at these new zones that we have, these two new zones, and see if they're high liquidity zones. These are already marked as high liquidity zones from last week. This was done on Friday. You can take a look at Friday's stream or Thursday's stream for that, Thursday or Friday, right? But these zones, we have two new zones. So we're going to take a look at these zones and see if they're high liquidity zones. Okay. So basically what I'm looking for to see is, has demand taken out an opposing zone, a supply zone on the way up, right? Did this move up take out? Yes, it did. There's a rally, a base, and a drop here. Price pushed up and took this out. So if you look at the 30-minute as well, it's very clear. There's a rally, two basin candles, and a drop, and the move up took that out, right? So that's a high liquidity zone. So I'm going to bring that label there. Okay, and then the zone below, did this take out anything to the left? Yes, this demand took out this supply. There's a rally, two basin candles, and a drop. There are three candles that have dropped, and this move up that started here took out all of that supply. Supply here and supply here. There's supply here as well, a drop. three basin candles and a drop, and then a rally, two basin candles and the drop. Okay, so that too. Okay, just clean up the chart a bit. Okay. All right, now prices in supply. We're going to check for a liquidity candle in here. There was one marked. I deleted it because I wanted to remark that candle. Okay, so the largest candle here, the bearish candle, I'm looking for the largest bearish candle. So far on the 1 hour, it's this. That's a 114 pip candle. That's the entire width of the zone. So let's mark that out for now. Let's go down to the 30 minute. 30 minute, it would be this candle right here, 82 pip candle. Okay, let's go down to the 15 minute. There's a 58 pip candle here, 72 pip candle there. Yeah, we're going to take the 30 minute candle. Take the 30 minute candle. That's how we had marked it, 30 minute candle, right? Just look left. Yeah, there's nothing else. So that candle right there, 212388. Okay, and that's exactly where price is right now. Okay, perfect. Now we'll take a look at this area on the 1 hour and see if we have, if price, because it's a high liquidity zone, if price comes in here, could we have a reaction back to push up? Okay, so the largest candle would be this. Let's go down to the 30 minute. Still the same candle. Let's go down to the 15 minute. $66. Yeah, that would be better. And there's a tap there. There is support there. Let's look at the 5 minute very quickly. Two, 36. 8 to 36. Okay. 571917. Okay, perfect. That's a liquidity candle right there. Okay. Now, keep in mind the EMAs have crossed, right? Prices above the EMAs can have a pullback here and price continue. If you look at the 4-hour, we're very bullish on the 4-hour. We've created demand, a 4-hour demand. Also, we've created 4-hour support. On the daily, we're pushing up. We're bullish on the daily. For now, we're bullish on the daily. On the 4-hour, we've been bullish for a while, since Friday. On the 1-hour, we are creating demand zones and 1-hour support and pushing up. So we could tap into this and continue higher to 2882. Let's see. I will need a pullback before to getting on this trade, because there is absolutely no buying for me inside a supply zone. Okay. Right, let's go to the zone below. In case price doesn't find enough liquidity here, it's going to drop to the next level of liquidity. As I've said, price moves from liquidity to liquidity. These are 5 key areas on a chart where I identify liquidity. So if it doesn't find liquidity at one area, it will move to the next area to gather enough liquidity, and then it will move in the opposite direction. That's all price does every day. So let's look at the 1 hour time frame. The largest candle here would be this doji. That's a 100 pip candle. Let's look at the 30-minute time frame. There's this candle here, 117 pip candle. Let's look at the 15-minute. $103. So much smaller. Let's go down to the 5-minute for a second. No, it's the 15-minute candle. That one right there. That's a liquidity candle, and that runs right, and 2850 runs right through it. Perfect. 5077 036 036. Okay. Yeah, that's 330 pips of downside. Okay, so that's it. That's the analysis with 6 minutes to spare, right? So the analysis, the prep work takes about 20 minutes, 25 minutes, sometimes 30 minutes, depending on how long I take. But roughly that is why the streams are structured in a way that if you only want the analysis, to see the analysis for the session, then you just need to be here for the first 30 minutes. That's it. And then you can trade however you want to trade um, with the given information, right? Uh, if you stay longer, then, and if I see a setup, then I'll take a trade. You can take the same trade with me. If I win, you win. If I lose, you lose. But when I lose, I always manage risk. So that's a very, very important and extremely important part of trading, is to manage risk when price goes against you. When you are in drawdown, managing risk is a very important thing. So if you're copying my trades, then then you need to copy that part too. And then towards the end of the stream, the last 5 minutes or 10 minutes of the stream, I do give out setups for the next 2 to 3 hours of the stream, for the next 2 to 3 hours of the session, because I keep the streams to about an hour, 45 minutes or 2 hours at the most. Um, but in the last 5 to 10 minutes, if I see a possible setup happening, if I can predict price very clearly, then I do give out those setups, just like we did on Friday. I said exactly what would happen. Go watch the last 5 minutes of Friday's stream, or the last 7 minutes of Friday's stream, and what I said is exactly how it played out. Okay, so uh, I'll be back in a couple of minutes, and we're going to take a look at what price did in the Asian session and the London session, so that we might have a idea what price could do in the first 2 hours of the New York session. Okay, that's usually what we do here on the stream. So I'll be back in a couple of minutes. Okay, let's take a look at what price is done in the Asian and London session. Okay, that's the market open right there. A lot of bullish volume. Uh, Price opened around the market, gold market opened today around 28.58. Okay, that's the market open, and then we pushed all the way up. Okay, so we have to consider this as the Asian high because that was a straight push up, almost 200 pip push up. That's fine. 76.88. Okay, and then double four. Okay, NY session just opened. Don't worry, we have about 15 minutes more until I even look at a possible setup. I always wait for the first 15-minute candle to close to have a little more information on what the NY session could possibly do. At least the first 2 to 3 hours of the NY session. Okay. Four. All right. So Asian session price moved 172 pips, and in the London session we moved 124 pips. So fairly decent volume. Okay, fairly decent volume. Let's look at the 30-minute time frame. Yeah, we've created resistance there, rejecting the Asian high, the high of the day. Okay, we've created a new high. That's fine. Yeah, we created a new high. Oops. Okay, so the market opened here. There was a lot of geopolitical news with what's happening with Russia, Ukraine, and what happened in DC, what's happening in Europe with Zelensky's visits to the UK, and all the discussions that's been happening in Europe. So there's a lot of uncertainty in the market. So when there is uncertainty in the market, gold is a safe haven. Gold prices go up, right? That could be the possible reason for price pushing up another 190 pips right at the market open, right? So that's a jump basically. It's almost like a gap, and price immediately came, dropped to 175 pips, and retraced 175 pips to almost fill that gap, right? So price opened here. It's not really a gap, but it's a straight push up. You can identify it as gap. It's a single candle that moved up, a single 15-minute candle that moved 190 pips. The spreads would have been very wide. There is no chance you could have got in on this trade. Price would have just jumped straight up here. And then in 15 minutes the candle closed here, so then the pullback started and basically kind of filled or retraced into that gap, right? And then it created the Asian low. Now price was bullish the NY session, second half of the NY session on Friday. So the bullish volume also continued. So price came, tapped because price was above the EMAs, tapped back into the EMAs, and then pushed up. It couldn't get all the way up there. That was probably the end of the Asian volume because price couldn't continue to push back up because price had moved 175 pips down during the Asian session. So price did push up just a little bit and then it just ranged, okay? During the London Open, price tapped back into the Asian low but couldn't close below it because we're very bullish. So we had this 15-minute bullish engulfing candle form. This would have been an ideal London trade to take once we tapped into this and couldn't close back below. To take it back to these highs, that would have been a perfect trade to take. And price did push back to that Asian high there eventually, right? We created the London high, pulled back a bit back to the EMAs because again price is very bullish, at least for the day today. So we pull price above the EMAs, so we pulled back to the EMAs, grab liquidity, and to that liquidity candle that we had created on the way up. Price grab liquidity from that liquidity candle, the one that we've identified here, and the EMAs, and pushed all the way up back to the Asian high, right? Now price has come to the Asian high and we've created 30-minute resistance, and that's from a liquidity candle. So we're going to take a look at this area now and how broad that candle is. It's an 80 pip candle. That's a very wide stop loss to have. What is this? 1400. This candle broke this high. This broke this high. Yeah, we're pushing down. We're pushing down. We're pushing down, but I would rather, sorry, I would rather look for, hello, yeah, test, yeah, okay. I would rather look for buys. We should push down. In fact, we should just drop. Yeah, we're dropping hard. Yeah, this would have been the place to take. Don't mind taking a trade here to come down. Stops above this high because we should be coming down. We created 30-minute resistance, rejected the Asian high, and we should be coming down at least to here. 2868. Yeah, I'd like a, yeah, we should be coming down. Maybe we tap this liquidity candle again. The 1 hour we have a tap. Two 869. Yeah, we're coming down. But I'd like to get in higher here. We should be coming down to 2869. It's about a 40 pip drop, maybe further down, even here. Mhm. 15. Yeah, this would have been the perfect trade, sell to take, but TPs, the trade will be, might be short-lived. I don't think this is a counter trend trade. That is why 30-minute resistance formed pre-NY session. This is the retracement from around 2876, drop to about 2868, about 80 pips. It's a counter trend trade. Yeah, about 80, 70 to 75, 80, 70 to 80 pips. Yeah, I wish we pulled back. I don't think so. There we go. Spreads are quite wide. Take another one there. Wow, it tapped 2869, pushed all the way back up 50 pips. That's okay. Just give me a second. I'll be back in a second. Okay. It's a lot of bullish volume that has come in. Just wondering if I should hold my trade or close everything. Price pushed up 60, almost 65 pips. Let's see. Let's give this trade a chance. I'm going to wait for the 15-minute candle to close. That'll be the close of the 30-minute candle. If the 30-minute candle closes above the London high, right? That's a London high. Yeah, we close above the London high, then that's a rejection. Price is then pushing up. It's very likely that the next candle. But if the 15-minute candle closes below, that means the 30-minute candle also will close below the London high. That means price is coming down. Sorry. So I'm going to wait for another 13 minutes, little over 13 minutes. Let's see, then make a decision. Just gotta wait for the 15-minute. This might be a bottom wick to push up. This is a lot of liquidity to push up 57 pips, 58 pip liquidity can wick, and it is off this 1 hour candle. The high of the candle is 68.93, low 68.95. Yeah, we tapped the high of that candle. We pushed all the way up. Let's see if it's grabbed the liquidity to continue up, then the 15 if it has, then the 15-minute candle, the 30-minute candle, and the 15-minute candle will close above the Asian, the London high. Sorry, the London high. If it has grabbed the liquidity from this 1 hour liquidity candle, right? This is a liquidity candle. If it's grabbed the liquidity from it already, then the 15-minute candle and the 30-minute candle will close above the London high. That's a signal for me to close the trades. If it hasn't grabbed enough liquidity, that means it's coming further down, right? And that's where my TP is. So we'll have to wait another 11 and a half minutes, 12 minutes to see where the 15-minute candle closes. The 30 candles done 198 pips already. 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 198 pi Hmm, interesting. Six. 75 pips. It should be about a 50. Yeah, 50. Now the reason I took this trade I explained already. Asian high, price has rejected the Asian high, created 30-minute resistance where liquidity candle is. This is the liquidity candle. We are identified liquidity candle. That's number one. We rejected the Asian high. Number two, 30-minute resistance was formed. Number three, I should have taken the trade up here, but price moved down very quickly, so I got in here as well. On the pullback, I've got in here, anticipating price to come to 2869, 2868, 2866, and maybe further down. Let's see. It's got to wait for the 15-minute candle to close. Can't do anything under the 15-minute candle closes. It's got 9.5 minutes more. Price can easily come down, push all the way back up again because there's a lot of time for the candle to close. Almost 10 minutes for the candle to close. So this could be a retest of the London high. I don't know why I keep saying Asian high, of the London high to push back up. That's very possible that we push back through these. But I have to wait for the candle to close. I can't make any decisions until the candle is still open. Gotta wait for the candle to close. Because as I said, if the candle closes above the London high, that means price has grabbed liquidity already, right? And it can continue higher. Now we don't know if this candle will continue higher, the next one or the one after that, but there's a higher chance, a higher probability that price will continue higher because it's already grabbed liquidity. For that, the 15-minute and the 30-minute candle has to close above the London high. If the 15-minute and the 30-minute candle, which is the same candle because this candle will be, this 15-minute close will also be the close of the 30-minute candle. If they close below the London high, then it's very likely that price hasn't grabbed enough liquidity to push up. So that means we're coming down to grab more liquidity, and that's a good thing because we got our TPs on the way down for price to come and tap them, right, on the way down. It's got to wait about 8 minutes more. That's a very big candle push up, 60 pips push candle. We are going to get some volume here to push back up. It's likely. Let's see. Struggling to get down. We're going to get some volume to push price back up. But I have to wait for the 15-minute candle to close, which is almost in about 6 minutes. 6 minutes more. Then I'll decide if I'm going to hold these trades or not, hold the sells or not. But I'm going to wait for 6 minutes for the candle to close, because it's important when you're following price action to follow logic, uh, to enter trades, to manage risk, or to exit from trades, right? You follow the same logic. So if we close above the London high, it's likely that we're heading higher. If we close below, it's likely that the next candle is going to break the candle low and push further down. 5 minutes more. Let's see. If you have a lot of bearish volume, price could push all the way into this low here. There is no, what is this? London, yeah. There's no bottom wick here. 64.50, 2865. 65. Yeah, we could get there. Could get there. 2865. If there is bearish fall, if price is coming down. It's about 85 pips if you get there. Three and a half minutes more for the candle to close. Gonna wait. Yeah, let's have it on 30 minutes. Let's see where this candle closes. If it closes at the right at the London low, I mean the London high, that's fine too. If it closes at the London high, that's fine too, because that means that on the 15-minute we're closing below this support. There's support here that was formed to push price up, and we're closing below that support, right? So that's fine too. About 2.5 minutes more. Now, where, if price is to push up, where should it be heading to? It's heading to a liquidity area, right? So that's where your exits are. So it could be the EMAs, that's an area. The liquidity candle, that's another area. Or if it doesn't find enough liquidity in either of those two areas, then it's coming down here to 2850 and this liquidity candle down here. They were pushing up. Pushing up. Look at that. Let's see where the candle closes. Yeah, we're closing above. Seems like we're closing above. A minute more. Looks like we're closing above the London high, just above it or at it. Let's see where it closes. It would be great if it closed below, but it might close above it. Yeah, yeah, we're closing, might close above it. Ten seconds. Closing at the zone. At the, I mean, at the London high. Below it. Or below it. Below it. Good. Close below it. Okay. 30-minute close below. It's a good sign. Let's see if we can continue. Let's see. How much volume do we had? 72 pips. Yeah, there is decent volume for sure. There's decent volume in the NY Open. It's a 60 pip candle and that's a 70 pip candle. Maybe create a top wick and come down. Nothing yet. There's no top wick here. The price is coming higher. Maybe come back here. Could come back all the way up here. Yeah, it could come back to 2875 again. Yeah, maybe even here 2875 or 2876. I'll have to wait. Now, what I might do is a 30-minute candle has closed below. Let's see. How do we manage risk on this? Yeah, if a 15-minute candle closes back above this support, above 2873 or 2872.75, let's say 2873, right? If a 15-minute candle closes back above 2873, then I'm going to manage risk. Because we've closed below, if we close back above, then we're ranging, and I don't like holding price while it's ranging and in drawdown. Because there's support there. Because I should have ideally taken these trades up here, which I didn't. If I did, then that would have been better. I would have had less drawdown, but because they're taken quite late, I have to manage risk. That's more important. Managing risk is more important than anything else, than my exits, or my entries or anything. Managing risk. So there is 15-minute support right here. We've closed below it, right? That makes sense. There's 15-minute now. The 30-minute candle and the 15-minute candle has closed below the London high, but there is 15-minute support here, right? That created a problem. That's why you had this wick. If that wasn't important, price would have just not created. Price wouldn't have pulled back up. So that support caused a problem, and price pushed all the way up 60 pips, right? So if the 15-minute candle closes above 2873, then I'm going to close my trades or close most of them. And obviously, if before that, if price comes here and breaks the 30-minute high here, then I'm going to close a couple of positions also. That's 2876.25. 2876.25. And then this level right here, 0.6. Yeah, we're coming up. We're pushing all the way up again. Got to be careful. I hate drawdown. Absolutely hate drawdown. Yeah, if I taken my entries up here, then that would have been fine. I would have maybe held it for longer, but regardless, there is drawdown now, so I'm not going to hold drawdown. So if you break 2876.25, I'm going to close a couple of positions, or maybe even all of them. But if the 15-minute candle closes above 2873, then I'm going to close maybe all of them as well, whichever happens first. Yeah, we're coming up, we're coming up, we're coming up. See, this candle created a lot of problems, this 5-minute candle. It's a massive push up, price came, closed it, couldn't break the low, pushed all the way up, another 55 pips. That candle is an issue. That was a liquidity grab. That is why I've always said this, when you see a massive wick like this, that's a liquidity grab. It's 56 pips, that wick. That candle right there, that was the creation of that wick. 60 pip move up, price came down, pushed all the way up. 55 pips. Yeah, this is a counter trend trade. So you got to be very careful. This is a counter trend trade. So you got to aggressively manage risk when it's a counter trend trade. This is a trade completely against the trend. Completely against the trend. Counter trend trade. I took it because I was anticipating price to come and grab liquidity before it heads higher. So, gonna manage risk. Just waiting for the 15-minute candle to close. 7 minutes, 7.5 minutes more. Let's see. Yeah, we're pushing up. We're pushing up. So that's my level. 287625. I close everything. Right? If the before the 15-minute candle closes, if price heads to 2876.25, I close everything. Because it's a counter trend trade, there is absolutely no reason to hold heavy drawdown on a trade like this. This just makes no sense. Yeah, price came back to 2875. Tap this candle. You come higher, maybe 2876. 5 minutes more. Let's see. Where are we going to close? Are we going to close above 2873? Seems like it. Yeah. 3.5 minutes more. It seems like we're going to close above this support here. Pushing up. It's unlikely that this candle flips bearish. Very unlikely. Just 3 minutes more for the candle to close. Very unlikely that it flips bearish. If it flips bearish, then the price is coming much further. It's coming down because then it's grabbed liquidity. It's created a wick if it flips bearish, a huge wick. So I don't know. We'll have to wait and see. 3 minutes more. Let's see. It can flip bearish, but if it flips bearish means then just like how it created this big wick to push up, it's created a big wick to come down. But it'll need to, otherwise we're closing above 2873 and we're pushing further up. We're going to break the high and continue higher. Two and a half minutes more. This candle has to come all the way down here. All the way down here. Otherwise we're closing above 2873. Price has to drop all the way down here in the next 2 minutes. Doesn't seem like it. Just to come here. Still, it's a minute and a half and it's got 15 pips to drop for it to come down. Forty seconds more. 2873. Yeah, we're closing above 2873. There we go. Gonna closed a couple of positions. That's how you manage risk. You gotta manage risk. Now, price might drop down. That doesn't matter. You gotta manage risk. I said if you close above 2873, above this support, I'm gonna close a couple of positions. That's what I did. So far break even, no loss. I closed it right at when price was at those entries. So break even so far. Now, if price goes up and breaks 2876, then I'll close the other two. But now I'll lose less, right? So instead of losing 40 pips, I lost 0 pips on those trades because I closed them at break even. So now I lose just maybe 30 pips, and that's fine. I've cut my losses. Cut it so that I've lost nothing. That's how you manage risk. You gotta have a system in place to manage risk. And when you do manage risk, be happy, be proud of yourself. If you manage risk in a very logical manner, right? There's a manner that you can follow, a way that you can follow for your future trades, in your next trade. So the 15-minute candle closed below the London high. The next 15-minute candle closed above the London high and above this support, right? So that made sense to close at least 50% of my position. Not the whole thing, but at least 50%. Exactly close at 2873. 2873.04. Perfect close. Close right at the entry. Price might drop. It might drop 200 pips. That doesn't matter. I followed my plan of managing risk based off on price action. That's what matters. Because the outcome of trading, no one knows the outcome. I don't know the exact outcome. I don't know. Every chance has a 50% chance of winning and a 50% chance of losing. That's how you approach the market every day. Yeah, so now I'm just waiting for 2876.25 to break. If price comes, break that high, close everything. Or before it breaks the high, if 30-minute support forms here, then you close everything. Because that's a 30-minute support has formed now against me, right? I've taken a sell trade and a 30-minute support has formed. A 30-minute bull candle has closed against me. There's no reason to hold the trade, right? At that point, the sells are invalid because now we have 30-minute support, a high time frame confirmation for session trading. You got to wait for that. I got to wait for the 30-minute candle to close. So it's whichever happens first. If price comes and breaks 2876.25, I, that's the previous this previous 30-minute high. If you break that high, there's no reason to hold the trade. You close everything. Before that happens, if 30-minute support forms here, then also I close everything. So the idea is always to lose less than what you had planned to lose. So if you risk 2% on a trade or whatever 1%, let's say you risk 2% on a trade, then how can you lose less? If you can lose, let's say, 1.5% instead of the full 2%, that's a save, right? So that means your winning trade would have to do less uh, to make up for that loss. But if you plan to lose 2% and you lose 2% or 2.5%, then your next winning trade has to do a lot more to make up for the loss. Right? So if you can lose 1% instead of 2%, that's even better. Seven and a half minutes more. Let's wait. So far, there's nothing. There is not much movement. There is volume in the market, but price is ranging probably until NYSE open. We've got about 35 minutes to the NYSE open, so price usually ranges. You have the first hour that either has a lot of volume, which we did. The first 50-minute candle was a 70 pip candle. The next one was a 60 pip candle. So we had volume pushed down, and now we are likely ranging. So we could be ranging for uh, price to continue down because we pushed down. So we could be ranging until price continues down, and then later on in NYSE session, we create the 30-minute support from a liquidity candle or a liquidity level and push all the way back up. That would be the trade for the day, the buys. So that's a trade. I will give out that trade before I end the stream. But ideally, from what I see now, what I've seen so far, will I'll try to be a little more precise, but that would be the trade for the day. To see price push back up, grab liquidity and push back up. Six minutes more. Let's wait and see if are we forming support or not? Are we forming 30-minute support here? Seems like we're forming support. If the 30-minute candle forms support, that means obviously we're closing bullish, and that means we're closing back above the London high, right? So we're forming. So if the 30-minute candle closes like this, that means we've formed support and closed back above the London high. And at that point, it's best to close. The price can drop, but why take the chance? Because the as I've said before, the probability of price going down, now it's further reduced, right? If you form 30-minute support, if you close above the London high, further reduced. The probability of price heading down. Yeah, that's it. Going to close. We're forming 30-minute support, and we've got a minute and just under 2 minutes for the candle to close. The 1 hour candle is also, yeah, there's no reason to hold this trade once we form 30-minute support and close back above the London high. Just wait another minute and a half. A minute more. Let's see where this candle closes. Forty seconds more. Yeah, closed. So I lost nothing on that trade. Absolutely nothing. All trades are closed at break even. No loss at all. If it drops, that's fine. It's absolutely fine. If price drops, continues to drop 150 pips, that's absolutely fine. It's just that you have to find a way to manage risk when you're in drawdown. If I taken the trade up here, it would have been a different story. I may have waited for price to come back and break this high to close my trades, but there is no guarantee. Price has created support, right? And we've closed above the London high again, so we could push up. Right now, there is nothing. You have to wait. Gotta wait. Right now, nothing. We've formed support right in the middle of this, in between supply and demand. There is supply here, there's demand here, and there's 30-minute support right here. So there's nothing to do right now. Just wait. So I'll be back in a few minutes. I'll be here for another 30 minutes. Wait for the NYSE open, and then just before the NYSE open, we'll take a look at the chart and see if there might be a setup for the next 2 to 3 hours of the NY session. Okay. Yeah. Right now, I'm waiting. I closed everything. Closed all the trades at break even because 30-minute support formed here, and the candle closed back above the London high. So there was no reason to continue to hold the trade because there's a candle has closed against me. So price can easily tap back into the London high, create a bottom wick, and then go up and break this 30-minute high and continue high. That can easily happen because we've formed 30-minute support. Prices, it came here, it touched the 1 hour candle high. That's the liquidity candle. It touched the high and it pushed all the way up, right? So you got to be careful. You got to wait now. You got to wait for more confirmation. Uh, Better confirmation is at the liquidity candles, right? That's always better. But we have to wait. Right now, there's absolutely nothing to do because price is in between supply and demand. So you got to wait. And also, it's a Monday. Don't try to force a trade. Wait, the week just started. Let's see how the candle closes today. How much that'll give us a lot of information. Where price tapped into, what was the direction of price, what was the correct trade of the day, what level did price tap into? Did it tap into a BRN or a weekly SR level or a liquidity candle and grab liquidity and go? Which way did it go? Did it go up? Did it go down? How much volume was there in the daily candle? All of that information. Well, you'll have all that information by end of NY session today. So there's no need to rush into a trade, force a trade today. Just be patient, right? And today's trade, the trade that I just took, why I took the trade and how I manage risk on this, is a perfect example of how you manage risk. So even though my entries were not that great, because my entry should have been when the 15-minute candle opened here, when this candle opened here, that should have been my best bet to take a trade, or even here, because 30-minute support had formed at the close of this candle. So this would have been a good place to enter, or even here could have been a good place to enter, right? But since I entered around here, I've got to manage risk because you got to detest drawdown. If you're a session trader, especially if you're a session trader, you got to absolutely detest a drawdown, and you got to find a way of of managing risk every day, uh, you know, based off some very logical rules. So the way I do it is based off price action. Okay, I'll be back in a few minutes. Yeah, there's no point having this. We can get rid of this now. Rid of all of that. See what happened? 30-minute support from 30-minute candle closed bullish, forming support, and closed above the London high. The next candle tapped into the London high, came and broke the previous high, right? And that's exactly what I said would happen. That's exactly what happened. So when you know that's a possibility, why hold drawdown? Why? Tapped in here, pushed up 35 pips. Now, obviously there are no buys. There are no buys because prices, even if you took buys here, there's no space to run. There is a supply zone and a liquidity candle right here. The liquidity candle, as I said, is a 81 pip candle, 81, let's say 80 pip candle. Price has come 36 pips. It's not crossed the 50% mark, which means there is possible liquidity in this candle to push price back down. And there's a weekly SR level right there at the top of that liquidity candle, right? So you got to be careful of this liquidity level. So you cannot buy under no circumstance you can buy in here because price can at any point inside this liquidity anywhere here or even here push straight down, right? So you got to be careful. So there are no buys, but you can still take a counter trend trade, but you got to wait for now 30-minute resistance to form again, right? Because 30-minute resistance formed here, but 30-minute support formed here. So you got to wait for 30-minute resistance to form to take a trade to go down. Ideally above here. Above here, price is very likely going to break this high, continue high, and then let's see what happens. But you can take a counter trend trade. Counter trend trades, you can take them, but based off rules. You can't just take just because price is going up. You can't trade the first 15-minute bearish candle or the 5-minute bearish candle. You got to wait for a high time frame confirmation. So uh, at a liquidity area. So this is the liquidity area. We've got a liquidity candle here. We've got a weekly SR level here. So if price comes back inside, creates 30-minute resistance, yes, you can take a trade to come back down. But the better trade would be if price drops, creates 30-minute support, and then pushes back up. Feel free to ask any questions on anything that I've discussed so far. I've been here for almost an hour, 45 minutes. I'll be here for another maybe 15 minutes. 15, yeah, 15 minutes more. We'll take a look at the chart in about 10 minutes and see what could possibly happen in the next 2 to 3 hours. Yeah, there's nothing happening right now. Just waiting for, see where this 15-minute candle closes. Interesting. Tapped back here. Yeah, but still trying to push up. Maybe if the 15-minute candle had closed back below here, I may have considered, but it's not. It's pushing back up. It's nothing. Just tells me that sells so far sells are not the move for the day. So far. From the candles that I've closed so far. So there's a 30-minute bearish candle here. There's 30-minute support formed here. A bullish candle closed above the London high. This bear candle closed below the London high. This one closed back above the London high. And now the 15-minute has tapped back into this and closed above. But these two candles, both these candles are dojis. So they offer no information, right? So it's basically this 15-minute candle closed above, and that's all the information that we have on the 15-minute time frame. On the 15-minute time frame, these two candles offer no information. But on the 30-minute time frame, we have a candle closed above the London high, and we have 30-minute support form. So still nothing. It's got to wait. There's nothing happening. Yeah, okay. There's nothing happening. 15-minute time frame. That's the Monday. Um, there's nothing happening. So, I'm gonna be here for another maybe 10 minutes. It's time. Yeah, 10 minutes, 10 minutes more. Okay, so let's discuss what could possibly happen. Right. Price has done nothing. Price is in between. Price is almost at supply. You can say price at supply. It's not done anything. It's not shown possibility of reversal. It did here pre-NY session and did drop 70 pips. But since then, price has just come back up and closed above the London high and is trying to push back up again. So it's very likely that we're going to break this high, right? That's very likely that we're going to break this high here. This high is 2877.5. We're going to break this high. Very likely that's going to happen, right? Price is heading higher. I not good just because I know that's going to happen. That doesn't mean I'm going to take buys here because price is in supply, obviously, right? Um, so two ideas. First idea would be the better idea because it's buys, but they both could work because on the 4-hour we are bullish. We have created 4-hour demand. It's very likely that this candle also closes bullish and we continue higher to 2882 at least to 2882, right? Uh, and on the 1-hour also we are bullish, right? We have tapped into this demand level here, rally based rally, and price is trying to push back up. Okay, so for buys, I would want to see 30 minutes support formed. It has formed, but it's not in a place where I can take a trade, right? This would have been a good buy, but if this zone wasn't there, if this zone was higher up, one second. Yeah, yeah, we've tapped into, it's open as 585, 5.85. Yeah, that's still not enough space. Just 40 pips. It's not enough. So even if you take this rally, two basin candles and a drop, that's the zone. There's a liquidity candle there. That's the issue. There's a liquidity candle there that hasn't price hasn't crossed the 50% mark of that candle. Yeah, it's not a wise thing to do to take a sell to take a buy up there. Okay, so as I was saying, uh, would want to wait for a pullback, either for price to break through this liquidity candle. Once it breaks the liquidity candle, yes, then price can pull back, create M30 support, and push all the way up again, right? So that's one idea. But it needs to break the liquidity candle. So, or price pulls back, now creates 30-minute support from here, from the EMAs or from the liquidity candle, or even down here, and creates 30-minute support or tradable 30-minute candle, 30-minute support formed, and then take the buys. Wait for the retracement, take the buys. Stop loss, if it's from a liquidity candle, stop loss, the safer stop loss is always below the liquidity candle low. If it's not at a liquidity candle, or if the liquidity candle breaks, then the stop loss could be under the 30-minute candle low that created support, right? For sells, you'll have to wait for 30-minute resistance to form. Again, a tradable 30-minute candle to be formed, 30-minute resistance to be formed, for price to, like this candle. This is a tradable 30-minute candle, right? 30-minute resistance is formed, and a tradable 30-minute candle. Now, both of these can happen in one candle. You can have a 30-minute tradable candle that forms 30-minute resistance. That's fine too, right? But you have to wait for that to form, either at the liquidity candle or at 2AA, or a touch of 2AA2 and for it to form, or the liquidity candle above it, right? Now, keep in mind what I said at the beginning of the stream, in the first 10 minutes of the stream, I think I said that, um, that these liquidity candles are very close to each other, which means prices tap them on the way down. So there might not be a lot of volume in those candles. Price could push right through it. Keep that in mind. We are bullish. At least on the 4-hour, we are bullish. So price can go through them, right? Keep that in mind. So wait for 30-minute confirmation. Either for, if you're taking buys, wait for 30-minute support to be formed with a tradable candle to take the buys to go up. If you're waiting for sells, wait for 30-minute resistance to form, a tradable candle at 30-minute resistance to form to take a trade to come down, right? Don't trade off the 15-minute time frame because price is ranging right now. There's not a lot of volume. The 15-minute candles are getting smaller. That's a 39, 38 pip candle. This is 20 pips. 47 pips. Yeah, we are ranging around 30 pips. So that's very low volume, right? You can see we're creating dojis, so it's low volume. So wait for 30 minutes support or resistance, clear 30 minutes support or resistance. See that? Clear 30 minutes support form, tradable candle, price came back, grabbed liquidity, pushed all the way up. Okay, that's what you want to wait for. I might set up an alert here above this high here, maybe 28 2878, 287750, 2878, and look, come back to the chart to see what happens once price breaks above this high, right? This high here. Once you break above the high, I might come back to see if you're going to form 30-minute resistance to go back down. Okay, so that's about it. Yeah, I'll be here for another 2.5 minutes. So those are the ideas for the next, what's the time now? 9:30, almost 9:30 a.m. EST. So until 11:30 a.m. EST, that's 2 hours, little over 2 hours. Let's say 2 hours 15 minutes. 2 hours 15 minutes, 2 hours 30 minutes. So for the next 2 hours, 2 hours or 2 hours 15 minutes, that's the idea. Wait for 30 minutes support to form from a liquidity candle to push back up, or 30-minute resistance, clear 30-minute resistance to form from the liquidity candle, or from 2882, or even this liquidity candle to push back price down again. Okay, yeah. It's nothing. 30-minute candle also could close a doji here. Equal wick on both ends. Equal wick on both ends means doji. There's just very little. If it closes like this, and it's just 3 minutes, 3.5 minutes for the candle to close. If it closes like this, then that's all the tradable volume. Just like 6 pips in a 6 pip range. That's a tradable volume. Average tradable volume in that candle. You got to wait for the candle to close. Obviously, it's about 3 minutes more for the candle to close. But if it closes like this with equal top wick and equal bottom wick, then there's nothing to do. There's no information on that candle. Okay, yeah, candle is 2.5 minutes more. There's nothing. It doesn't seem like it's going to have a lot of volume in the next 2.5 minutes. Yeah, so I did take sells. I closed out at break even today. I didn't lose any pips because I managed risks. Soon as 30-minute support, I closed it when the 15-minute candle closed above this support. That made sense to me because there's support there, and we did have a problem there on the way down. You can see this huge wick, so that support did create a problem. And then that was when I closed 50% of my position, and the other 50% I closed when 30 minutes support formed and the candle closed back above the London high, right? So that was a break-even trade, and I've given out a couple of ideas. Let's come back tomorrow and do a recap and see which one of them played out. Was it the buys or was it the sells? And that's it for the day. All right, there is no volume right now. The 30-minute candle is about to close in about a minute and a half, and it's very likely going to close a doji again. So there'll be no information on this 30-minute candle if it closes like this. All right, so back again tomorrow, 7:30 a.m. EST. Yeah, we're having at yeah 8:15 a.m. EST. We're having some news, so we're going to be looking to see if no, sorry, on tomorrow there is no news at all. Tomorrow there is no news. There's nothing tomorrow. It's no news. Absolutely no news. Okay, so we can wait. You can look for a trade after the first 15-minute candle closes after the with the NY open. All right. See you guys tomorrow. Take care. Have a great evening.